Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, April 8th, 5:03 p.m. Eastern Time, coming to you with tonight's Revere Roundup Daily Market Insight video. Market state, we're still in a harsh correction, and we saw some history today. Today was the largest intraday reversal in history for the S&P 500. So, we've been talking about all the volatility, the huge range, and that just continues to intensify. Um, Take a look at the trend gauge here. Still have the four red loafed arrows. Market leaders are nowhere to be found. And usually, when the market starts to bottom out before a fall through day, you start to see some leading sectors, some leading groups. You start to see some growth stocks set up in big bases. And there really is none of that to be found right now. So hard to think that the market's going to find a low here and go on for a sustainable rally. Maybe some mean reversion um, snapback rallies, but that is to be determined. Short term, we're still below the 21 EMA. The wind is not behind your back when you're below that. Medium term, we're also below the 50-day moving average, and long term, trading below the 200-day moving average. Um, 21 over 21 list is still under construction, and you can see red across the board today. And that was after an hour into the trading session, we were up almost 4.5%. So just some wild times, wild markets that we're in right now. Big 8 closed the day down 2.09%. RG8 down 2.92%. S&P down 1.57%. Equal weight down 1.89%. The Qs down 1.8%. Equal weight down 2.16%. Dow Jones down 0.84%. Mid caps down 2.17%. Russell 2000 down 2.69%. 60/40 stock and bond down 0.87%, and GROTECTION pretty much flat, down 0.09% on the day. All right, lots to unpack. Let's get into the interasset correlation. So what I mentioned, today was the biggest, largest intraday reversal in history for the S&P 500. Basically erased 4.5% in 3 hours from 10:30 a.m. to 3:15 p.m. Eastern time. It erased 2.3 trillion of market cap, which is just insane, to say the least. And this was a classic bull trap, as you could say. Characteristics of bear markets are gap up opens and closing out low of the day, and that's certainly what we saw today. And you can see, right, we gapped up, we're gapping up, 3%, rallied back up was up, around 4.5% here. And around this time, we started to sell off. China announced that they will fight to the end if the U.S. insists on tariffs. And then the U.S. announced they're set to impose a total tariff of 104%. So that trade war is really heating up. And that's when the downside move started to accelerate and just was pretty like a bloodbath into the close. But one interesting thing, 49.15 level was where we bounced near at the end of the day, and that level coincided with 20% from the high on February 19th, and we closed above that one, slightly below 5,000. But wild day to say the least. And take a look at the weekly chart, right? When you're below the 10, 20, 30, 40 week moving average, um, the market is susceptible to big moves down. Nothing good happens below the 200-day moving average, and all crashes occur from extreme oversold conditions. So that is just something to keep an eye out for. We are fully hedged right now with the S&P 500, but one silver lining, right? We did put in a higher low, although it's not the type of candle the bulls wanted to see, but a higher low is being placed here. So obviously this 49.53 level will be important moving forward, closed above it as well. And that is the low from this 2024 mild pullback that we had. If we take a look at the weekly, lower 48.18 is another level. This was the 2021 highs, and pretty crazy to think that we could be already coming back to the 2021 highs. So we'll see there. All right, let's take a look at the RSP. Again, similar thing, didn't break Monday's lows. That's going to be the line in the sand. That's going to be for a lot of charts is, can they hold those? If they can't, then likely a waterfall is coming. QQQ as well, similar thing. Still trading above 400 and Monday lows, but similar thing as the S&P 500, just brutal, brutal sell off into the close. Mag 7 rejected the 8, but still holding Monday's lows. Dow, similar thing, didn't even get into the 8. Mid caps didn't even get to the 8 holding. Russell 2000 again, and the Russell 2000 is now 28% off its highs and just completely destructed. So, this could be coming back into these 2022 bear market lows. That would be a level, held that level 3 times. So all these gains from this uptrend here washed away in a matter of weeks, and that's where the saying comes from: staircase up, elevator down, and that is in full force right now. ARC again, if no risk on sentiment right now, this is going to continue to get hit. FFTY again, growth leaders nowhere to be found. This continues to get hit as well. The VIX, huge reversal, closed the day up 30%. And, this is just showing you volatility is very high right now. Rule of 16, you take the price of VIX divided by 16, and that's what you can get for your expected intraday moves. And right now we're at about 3%. So volatility is crazy right now, but based on that rule of 16, it's normal and the VIX is this high. And you get that 16 level, it's the square root of 252, which is the number of trading days in a year. But, kind of looked like capitulation on Monday, but if the VIX takes out those highs, this could really blast into, 70, 80, you never know. And that could maybe mark a short-term bottom. Dollar, just kind of consolidating down here. Gold trying to hold the 50-day. This was one of the few sectors that was green on the day. Gold stocks, again, green as well, but rejected the 8 and 21. Silver, back below the 200-day moving average, and this one failed pretty hard. Copper has just been destroyed as well. CPER, it's just another commodity, CPR. We are looking, this, likely isn't good for the economy as well. Copper is a good gauge for that, but right, this was looking like a nice base breaking out. And then as the market started to sell off, this one got hit even harder with it. Bitcoin breaking below the 200-day moving average, MSTR, a good proxy to look at, right? This one looks like it's about to break down here below the 200-day moving average as well. So, using Bitcoin as a silver lining for risk on, not seeing that, and then everyone with the case that Bitcoin could be an uncorrelated asset, clearly is not the case. It's pretty much following the NASDAQ as well. Bonds continue to get crushed as well. TLT, same thing. They want rates lower and they're really not coming lower. This is a pretty textbook failed inverse head and shoulder breakdown setup, and this is not good for the markets either. TNX, same thing. This was the neckline, started to break down below. Bonds were breaking out with it, but undercut and reclaimed. So maybe a lot of trap shorts here as well. All right, that's the inter-asset correlation. We will take a look at the tail of the tape. All righty. Kind of a lot to cover in this one. Like we mentioned, we're in a harsh correction. VIX at 50, that's just complete risk off. Percent of S&P 500 stocks above the 5-day moving average hit 0.01. That's the lowest in like 5 years. When I was looking back at it in history today, I mean, it can't really get much lower. But like we mentioned, extremely oversold conditions can stay, and sometimes that can lead to a crash. But I mean, just across the board, all the breadth indicators are like this. S&P 500% of stocks above 20, 50, 200-day. The 20 and 50 day are hitting single digits. 200-day, majority of stocks are below, which signals clearly a bear market. Fear and greed's at extreme fear at 5. News today, the 104% tariffs, and then that was the big thing that kind of started to fuel the sell-off intraday today. And then Thursday, nonstop, we have the CPI, and then Friday, PPI. Today's keys, the S&P and the NASDAQ got rejected at Monday's high, so red arrow there, but did hold Monday's lows. So that's going to continue to be a key line in the sand to trade against into the rest of the week. And then into tomorrow, we're still watching those same levels. Bulls are going to want to see Monday's highs taken out. And and then bears are going to want to see those lows be taken out. So we'll see. Those are just two key pivots to watch for more confirmation on trend. And then just another thing, are we going to get that mean reversion into the 5 SMA or 8 EMA? All the breadth indicators are kind of signaling that we could see it, plus max fear, but price is always our number one guide. Those are secondary indicators for a reason. Sectors wise, gold and XAR. XAR is aerospace and defense ETF, the only green sectors today. 11 of the 11 spider sectors were all red today, along with oil services, home builders, semiconductors, Bitcoin. So, very bad breath day. And I believe it was like an 88% downside day. So, pretty crazy selling. And the net new lows starting to look like they're capitulating as well. Just huge downside moves there. RVAB is 0.04. Balance at risk is 0.3, so only 30 basis points. And all GROTECTION did today was add to SH, hedging that SPLG position. Bottom line, S&P 500 posts the largest intraday reversal in history. We are experiencing records in this market right now. Let's take a look at some charts of interest. Not a whole lot. There's, some names that are holding up, but again, it's just kind of a trap in this type of market. It's just they're going to eventually get sold off as well. But, a couple names, Palantir, it's had a nice reversal on Monday. Obviously, logical place for this to reject the 821 50-day, but as long as this can hold this lows, if this can kind of form a base, that would be a good sign. You have Spotify. This is another potential name that we're watching closely to lead if the market starts to turn around, similar setup. So maybe as long as this can hold the low end of the range, this might just need a couple weeks to put in a base, and then it can be a lot more constructive. Bros is another one. Obviously, this one's holding the 200-day moving average. And one thing I want to preface is that we're always looking for new leaders. The leaders of today likely aren't going to be the leaders of tomorrow. But given the magnitude of this sell-off and the Q's down, over 20% off the high, and a lot of the growth stocks that we trade have high beta, high ADR. They're going to move 2 to 3 times the index. So any name holding the 200-day moving average, in my eyes, is showing minor relative strength. And some names that we like the story, like Dutch Brothers, just monitoring these to continue to build higher lows. Not really setting up for an actionable buy here, but it's always important to keep your list ready because you never want to get too negative on the market because then you start to miss the signs of bottoming formations coming out and you miss the leaders. Stocks always bottom before the market and they'll lead. That's why we call them leaders. So Bros holding the 200-day moving average. Can take a look at Robinhood again, harsh correction, but holding the 200-day as well. And some other names holding up near the highs better. Obviously TGTX got hit today, but this one's holding the 50-day moving average, has a lot better moving average alignment. This one acts like a beach ball underwater. If the market starts to turn around, this one could really head back higher. WGS, this one is another one that's holding up pretty good at the highs. One's a medical name as well. GH, this is another one, again, got rejected at the 50-day today. But overall, this one isn't looking too bad. Likely just needs some more time for a base. Let's see, Doximities. This is another one sitting right at the 200-day moving average. Definitely needs some work, but overall not too shabby. Like I mentioned, anything holding the 200-day moving average is not bad. Now let's see, just take a look at some of the mega caps. That's another reason. Netflix was actually green today. This is probably one of the best ones holding the 200-day. Microsoft continues to make lower highs and lower lows. And again, another thing is when the biggest companies in the world are trading below the 200-day, you have the death cross here. When the 50-day gets below the 200-day, the trend is completely down. It's going to be hard for the market to rally back up. Again, Meta, same thing. Nvidia rejected the 8, pretty weak bounce. 50 days well below the 200-day. Google, same thing here. Amazon, same thing here. Tesla, this has kind of got an H pattern here. And if this breaks those lows, this could have some more downside. And then Apple, again, down 5%. And, Apple moving from 250 to 170 in a matter of a couple weeks is pretty crazy for a name like that. So there's a lot of carnage out there right now, and we can look at, like I mentioned, the growth proxies, FFTY, just pretty insane volatility right now. And based on, Wall Street metrics, a lot of things are in bear markets, especially high beta stocks. Many of them are down, 50, 60, 70% off the highs. And that's that 50-80 rule about the leaders. If you have no sell discipline, you're going to eventually give back all your gains in those stocks. So, really our mindset right now is, being cautious, trading less, keeping a lot of cash, having a very low beta, and just waiting for the environment to get better, because clearly this is not a conducive market to be trading on the long side or short side. Any headline we saw on Monday, that fake headline sparked a 10% intraday reversal in the Qs. That was another record. I'm not sure, but you can see right here. It was a fake headline about the tariffs, and we shot up 10% from high to low on the Qs. So really is dangerous both on the long and short side. So we're being really patient here, being cautious. There's so much news getting thrown out there left and right. So now the time to be in a hero in the market right now. And that is exactly why GROTECTION has a dual mandate: grow assets in uptrends like we did in the bull market in 2024, and then protect assets in downtrends. And that's exactly what we're doing right now. So that is going to wrap it. As always, like to hear from you. My email is connor@revereasset.com, or you can always reach out to Dan or Don at revereasset.com. Phone is 855 real wealth, 855-732-5932. And you can always find me on X as well, Connor J Bates _ and if you're ever interested in becoming a client, as always, please reach out. There's no better time than to come join Revere right now, as assets they'll be protected in this, so we can capitalize when the markets start to turn around. Thank you guys for listening, and have a great evening.